And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Tuesday, February the 15th. I'm John. Thanks for trusting me with your time. It's a great day today. Russia has decided their exercises are over. They're taking 100,000 troops and bringing them back to their bases. Thank God. That's really good news. I'm very happy about that, if you couldn't tell. This morning, economic numbers, 7:30, the PPI and the Empire State Manufacturing Index came out. No hints of easing of inflation in those numbers. But now at least we get to focus on our numbers, on our information, and we've taken a little bit of the complication off of the table as far as potential hostilities in Eastern Europe and Russia. So thank God for that. Now we can kind of focus more on what the markets are looking for. Yesterday was a real tough day. We talked today in the forecast about trying to stay really patient and waiting for opportunities. There was a lot of chop. There was a lot of indecision in the markets. Then when the president of Ukraine started chirping about, the attack is going to be on Wednesday, and apparently he was kidding about that. I don't know who would do that, but that's what really drove price yesterday to the downside. And then when they came back and said, no, we was not serious about that, the market turned around and returned back to range. Waiting for headlines like that makes the chop while we're waiting for that information very, very hard to trade. A lot of folks I know had a difficult day trading yesterday. There was one guy on the recap last night that said he loved it. He had a great day trading. So, it's your strategy. It's your ability to hypothesize the state of the market and to trade to that market state. As far as other things going on this morning, we got crude prices down 3%, over $3. Gold and silver also have been hit, but that's expected when something like this happens. With the threat of war off the table, markets again can focus on economic issues at hand. We've got plenty of those to kind of deal with here as we continue moving through our days and our weeks in trading. Still a lot to digest. And we're going to be looking for good context, always thinking about risk management and remaining patient. Very important. So, as always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here at the Market Forecast and the Market Recap. Subscribe to our YouTube channel. You can get notifications for when we do go live, and thank you all for doing that. We've recently hit 15,000 subscriptions on our YouTube channel. Thank you very much for that. The VIX down over 7% this morning, 26.17 as expected. Dollar index down just a little bit, 96.03, and the 10-year yield continuing to leak to the upside, 2.03%. A little bit higher than the close yesterday. Gotta say good morning to everybody. I saw my brother was first one in the room this morning. You win the prize, Rick. I love you. Scott saw, and he conquered. Myrick, good morning. PPI up 9.7%. Jeff Martin. Theo, good morning. Spencer, good morning. Terry, Brody, Jeff, Shaw, Zerain, Brian Isaac Janus, good people. There's a good name. Good morning, Vince, to you as well. Bill, Dave Francis, Luis, dead letter opener, Sarah. It's dawn in Sarah Hall's world. I love that. Robert Kennedy, Alessandro, good morning. Thank you for attending the group coaching yesterday. If you are so inclined, we have a link for you tomorrow, another session of group coaching at 1 p.m. Central, right as the FOMC minutes come out, but that's all right. We'll see what happens. And all are welcome. Andres, Mr. Presto, Dr. VJ. Good morning, sir. Hope things are going well for you. Max, yes, Sarah, hallelujah, right? Ronald, good morning. Michael, because they let the Olympic skater compete. Yeah, I don't know about that. Good thoughts, though, Michael. Ray, good morning. Kirill, Eagle Flying, there's another good name. Dead letter opener. When, good morning. Equanimous Trading, good morning from Lombard, where it's going to be troubled. 39 degrees. Hey, nice. $2,000 in bonds yesterday. Awesome. That's great. I like the 39 too, because I'm not too far from Lombard. Let me get out and take a walk with the dog today. That letter opener, more like the Fed and Biden having their emergency settings, emergency meetings. Yeah. Casey, good morning. Scott, 3 lines insight. Jay, no, I don't know about that. I don't know if I would want that job, Jay. Hey, thanks, Devont. Expediter. Subs are here for you, Hope. Well, that's very nice of you to say, dead letter opener. Jerry is awake. Rick saying inflation is worse than Russia, in his humble opinion. It's certainly going to be a sticking point for us here, isn't it? Robert S. Mr. Fox and good day. Jerry is awake. Tried for the group coaching and companies showed up. Oh, well, that happens. We do it every Monday and Wednesday, Jerry. You got plenty of opportunities to join us. Syed, I don't know how to pronounce that. Sorry if I'm chopping it up there, but welcome everybody. I saw a couple of new names there. Welcome to the Market Forecast, as always. We're going to be looking at these charts very shortly here. Crude, E-mini S&Ps, Nasdaq, gold, euro, 10-year yield, 10 years, and the nat gas are the products we focus on here in the forecast and the recap. Hopefully, we're going to find some good context, and we are always reminding everybody to stay patient, and so important as a trader to do so. Those that are patient seem to get paid. All right, so I think we've got our business taken care of. Let's take a look at the charts, as always, starting with the daily in the S&Ps. Then we'll look at the crude oil, and we'll catch the open on that, see if there's opportunity in that opening range trade, and let's see what's going on. All right, so the daily in the S&Ps. It's a brighter day. Still the same. Still, we just have one weight off our shoulders now. Rick was talking about the inflation being a bigger deal than Russia. He may be right about that. We've got some inflation problems. Now we can focus on those problems and take one of those complicators off the table. We've probably trapped a few shorts down at that low there. We added 28,000 in open interest on that push down towards weekly kickoff low, which did end up being very supportive for us yesterday. We added some open interest in the last couple of days, so thinking we've got some trap shorts down there, and obviously the market heading that direction after the news last night. Medium time frame range, short time frame control. We're going to be looking back to some shorter time frame levels to look for our opportunities and to be able to manage risk. If we are in short time frame control, short time levels are more likely to be respected The problem with that is there's a lot of them. Be patient. Look for your best trade locations to manage your risk. Take a look at the 30-minute chart. Okay, here's our range yesterday. Here's when Zelensky started talking, and then when they talked it back, came back and basically settled right up here at 43.94. We didn't really accumulate any open interest until the news came out about Russia pulling back from the border of Ukraine. Great news. Markets loved it, of course. It's basically taken us back into a potential area of repair from Friday. We talked about this yesterday, that if we kind of got into this low volume mode, we might start to go into repair, which would have us looking up to the high volume mode here. Lacey. High volume node here into the low volume node there. Easy, girl, easy. I know there's a dog out there. Lacey. Crazy. So now we're in that area. Are we going to finish the repair today? That's a good question. It's a good possibility. But we are opening with some overnight longs. We are probably going to be opening with a gap. Some of those overnight longs already getting nervous from those PPI numbers. Gap rules are going to be in play today. If we can't close the gap relatively early, then we'll look for the market to trade packs possibly back up to this high volume node from last Friday. We're already getting nervous. We're already seeing this market pull off from those PPI numbers. I'm going to be probably relatively interested in seeing the opening range today. If the opening range remains one extreme or the other, and it's not too wide, it might be an interesting opportunity for us in our equities today, because we're basically opening out of balance from yesterday and into an area of imbalance from Friday. If we repair this area, then we'll be set to move along. But it's a distinct possibility for us for today. Yeah, Zelensky did. He took it down to the weekly kickoff low. If he's watching him, maybe he had some buy orders down there. We'll have to see. All right, take a look now into the crude oil. Okay, so yes, it is a brighter day. Don't forget, crude oil is in rollover. By Thursday into Friday, we'll be moving into the April contract. Still the same upside structure remains. The fact that Russia's pulled back is implied easier supply. We don't know that is the case yet. We are waiting for the API and the EIA. API tonight, EIA tomorrow. Open interest continues to cut off. We've lost open interest for a couple of days here, which would be an indication that the auction process was tiring to begin with as we were reaching weekly kickoff high, which our overnight was 17 ticks above it. We looked above it yesterday. Did close above it, but we pulled back right after the close. So we're seeing some resistance at this weekly kickoff high level. Are we going to be opening? Did we open? Are we opening with a gap? Here's the 30-minute. No gap in range and in value from yesterday. We have a lot of overnight shorts. Still going to be somewhat news sensitive today. Here's our 1 minute chart. Did the opening range get left behind? And how did we lose our indicator here? There we go. Okay, we hadn't opened yet. So 82, 62, 20-point opening range right now. Getting bigger. Seeing some of those overnight longs getting a little bit upset here. Got a pretty big opening range here. We get about 30 seconds here before we complete the opening range. If I'm looking for shorts here, I'm going to be looking for the market to pull back into this opening range because of the sheer size of it. We got 82 to 47. We get 35 ticks of opening range. That's pretty big. Syed, we go over markets every morning. 7:45, the market forecast opens. So we've taken a look below the opening range now. The opening range is finished. It's the first minute of trade. We've looked down below. Is this showing signs of rejection? If I'm going to be looking to see if the market continues to the downside, I want the market to come back inside the opening range to give me the opportunity to limit risk. It seems we're getting that opportunity. We're back to halfway, the half back in the opening range. That's going to help us limit risk a little bit. We can risk maybe 20 points now, 20 ticks, I should say, to look for a short here. Now, there's no guarantees anything is going to work or isn't going to work. Just when we see the opening range left at one extreme, it may mean sellers could be in charge or buyers can be in charge if the opening range is left at the low of the session. There is that possibility here today, but again, with that opening range, that size, I'm not liking it. We'll go back and we'll see what happens in crude oil here as we continue through the market forecast here. Now into the Nasdaq. All right, so the news is happy. It's good news. We've got possibly some trap shorts down there. We added 3,200 in open interest yesterday, and we had a difficult time closing below weekly kickoff low. So this dog is making me crazy right now. I think she needs to go out, but we're going to get through this. The weekly kickoff low penetrated but not closed below 14,253 is weekly kickoff low, basically the 15% level here. 14,253 is settlement, basically right on the 15% level there. And of course, we see the market pleased about Russia. Here's the 30-minute chart. The dog to leave me alone here so I can focus. All right, here's a weekly kickoff low, settlement here, basically unable to close below it, obviously. The market opening with a gap. We're going to be opening with a gap. We're going to be very similar to the S&Ps, potentially finishing some repair from Friday. If we can't close the gap, of course, that means we're going to be looking for opportunities in the direction of the gap, which would have us looking higher. A lot of this depends on that opening range for our equities. We're opening out of balance from yesterday, but in balance in the medium time frame. I'll be watching the opening range. I'm not sure it's going to provide any good opportunities. The opening range has been very tough in our equities lately. Let's take a look at gold. Okay. Boy, we had a really good thing going on this upside move. We added another 15,000 in open interest yesterday. We've been showing some really good volume on this move to the upside. What news has changed the whole situation yet again? Okay. Open interest, again, indicates more new money on longs. I think we may have some trapped longs here. 6 days of increasing open interest. 1, 2, 3, 4, 5, 6. We've seen volume increase and open interest increase in this move to the upside, indicating a healthy auction. News has changed that. Our overnight high within 4 ticks of weekly kickoff high Man, I wish I was up last night to take that short. What about this trend line down here? Seems supportive. Take a look at the 30. Weekly kickoff high. The news comes out, knocks the market lower. We've opened with a gap. Opening range, neither the high nor the low. Looks like we're attempting to come and close the gap. But again, if we can't close that gap relatively early, we're going to be looking for opportunities to look for shorts. We think we've probably still got a whole bunch of longs trapped up here. It's almost similar but opposite to the equities. We've got a lot of repair from Friday that could come into play. Now take a look at the euro. Euro is back in the gooey, sticky area from a couple of months ago. We spent 6 weeks there or so. We're back in it. Yesterday on this move to the downside, we added 9,200 in open interest. Now, open interest has been waffling. That's a pretty big increase in open interest. Maybe we trapped some shorts on that move to the downside yesterday. And now we're getting, the market kind of snapping back to the other way. But I'm looking at this as short time frame control. We're back in an area where we spent a lot of time. Take a look at the 30-minute chart. A lot of overnight longs here. Long all night and not really showing signs of pulling back. So what does that tell us? Well, Friday is another day where we may be looking at an opportunity for repair. If we can get back above the value low from Friday and start spending some time, a pretty good opportunity for a move back to the point of control from Friday is in play. So again, we've got gaps, gap rules, more short time frame information than worrying about a war. I think we're going to see better trading day today than we did yesterday. Let's look at the 10-year. Okay. All right, we got a weekly kickoff low that's last week's low. We've been one to third day in range. We talked about that yesterday, and yesterday's regular trading hour session was inside the previous day's value area. We're still kind of in that. The market is still looking for new information. That new information did not come yesterday. We didn't change anything as far as open interest is concerned. I think it says there's a change of 6 on the preliminary. No change in open interest. What's going on here? The market is waiting for information. We know rates are going to be going up. Is it baked into price here? Okay, here's our one to third day in a 4-day balance. We've opened with a gap. I think we've closed the gap to the tick. Overnight shorts. These overnight shorts start to get nervous down here. Remember, weekly kickoff is intended to be a supportive level, an area where we're looking for longer time frame traders to need to adjust inventory. Let's take a look at the nat gas now. We know we put in a island low yesterday, over the weekend, really. We're seeing some continuation to the upside. We added 4,300 in open interest yesterday, up to weekly kickoff high. Weekly kickoff high is now below us. We should perhaps become supportive. We added again 4,300 in open interest on the move yesterday. Volume is holding up, even though the market is coming into rollover, so you're going to see a lot of blurriness as far as volume is concerned in the front month. Volume is going to start to fall off, and the new front month will be April, and it'll start to grow in there. So you get a little bit of blur, and it's, an open interest in volume, which makes it a little bit more difficult. But we know we've got an island low down here. So the island low is telling us, which this market seems to have a tendency to create islands. We gapped to this area, we ranged, we gapped away from it. That's an island low. It's a reversal pattern. Seems to be working for us. We know we've got a gap here this morning. We've already opened. If we can't close the gap relatively early, there's plenty of visuals, old gaps, points of control, lots of information up above for us to go and recheck. Lots of visuals. We got some visuals down below as well. We've got naked points of control, just a couple of them, and a gap to fill. So, in essence, I'm thinking, gap rules. If I can find an opportunity to buy weakness, if we can't close this gap, I'm looking for this market to continue to the upside. Now let's go back and see what happened with our crude oil opening range. Opening range came back inside, gave us the opportunity to limit risk, and the market is continuing to push to the downside. Look at this on the 30-minute chart. We know we have some overnight shorts here. We opened in range and in value. Our opening range is the high of the session so far. So as we reject range and value from yesterday, could create an opportunity for a continuation to the downside. We got crude oil already down more than 3%, more than $3 today. Let's take it back down to about $40. What do you think? Doesn't that sound like fun? Okay, Equanimous. I basically, just to keep track of the yields, I go to Market Watch. It's a delayed quote. But I'll send you the link. Here you go. All right. So, we've got our tasks upon us here. The link there should take you to that Market Watch site. It's a good site. You can see, basically quotes for anything on there. Hopefully that helps you, Equanimous. You're welcome. Back where I belong, the 30-minute chart and higher. Good. Which volume profile indicator do you use? Well, I've got a number of different platforms, but the one that I'm using for this market forecast is the TS Trader or Tradeovate market volume profile. If you have questions on setting it up or anything, definitely come to the group coaching tomorrow and ask, and I can go through it piece by piece with you. Don't really have time to do that here, but be more than happy to do that with you. All right. So, great news. A blessing for all humanity. Our prayers were answered. They're backing down. Thank God. Let's just hope that continues. Mostly S&Ps, Syed. Mostly the S&Ps, occasionally the Nasdaq. Okay, Coop, I'll look forward to seeing you there. So take a deep breath for peace, and take a deep breath for trading. Stay humble, grateful, and creative. I'm going to be with you for the Coach's Playbook today at 11:30, and then again for the market recap. So I'm looking forward to seeing you all there. And have a great trading day. I know I feel really good and happy because of the situation has changed. And get out there and profit. I'll see you in the proverbial trading pit here in a few minutes. Well, we got plenty of time before the equities open, so make sure you've finished your homework and get out there and profit today. Have a great trading day. Trade well, and I'll see you later.